Welcome and thank you all for joining us for this episode of the Crexi Podcast, an insider's look at all things commercial real estate. I'm your host, Ashley Kobovitch, Regional Director at Crexi, and today we are thrilled to sit down with Jesse Limon. Before we dive in, I'll give you a little bit of background about our guest. Mr. Limon started his real estate career in 2004, specializing in the sale of investment properties and luxury homes in northern Indiana. In 2009, Jesse joined Marcus Millichap's Indianapolis office, where he focused on the sale of national shopping centers and triple net investments. In 2013, Mr. Limon relocated to the Manhattan office, where his focus expanded to include retail in the New York City metropolitan area and 1031 exchange clients. And in 2015, he was promoted to senior associate within Marcus Millichap. Since 2009, Jesse has been involved in over 80 closings, totaling over 2.5 million square feet, with a total dollar value of over $400 million. Mr. Limon specializes in the sale of high street retail with an emphasis on net lease investments, national shopping centers, and single tenant properties and portfolios across the U.S. Jesse attended Indiana University, Bloomington and South Bend, where he graduated with a bachelor's degree in accounting with an emphasis on economics. He's an active member of the International Council of Shopping Centers, as well as Marcus Millichap's National Retail Group. And with that, let's dive in. Jesse, welcome to the podcast.
Thank you. Appreciate you having me.
Of course. Really exciting topics to sit down with here and discuss today. So I'm excited to dive into it. We'll get right in with our first topic. So I know I gave our listeners a little bit of background about you here, but can you describe your career background in your own words and your path to where you are now? So starting in commercial real estate and leading into net leases and 1031 exchanges.
So I started working out of the Indianapolis office, as you said, really during the Great Recession, which was an interesting time. I was cold calling a lot of owners who were underwater. The market was shifting dramatically from the highs of pre-2008. So it was a lot of challenging situations that I was trying to figure out how to help people with. And at first I wasn't very good at it. Some of the problems were just like beyond my understanding. And at the time, I had been selling residential real estate prior to that, and helping people figure out how to solve the problems with their shopping centers were things that, especially that had occurred during that period of time, was very, very, very arduous and involved. I took on some opportunities, worked my way through a couple of deals, didn't get them closed. A couple of years later, I was able to start building traction, rapport. I think with commercial real estate, I found that if you're willing to fail forward, just continuously run into that wall until you make a body size mark that you can get jump through. You will make it, but it requires you to just put yourself through quite a bit. I think that the start of my commercial real estate career was this kind of beginning of learning about personal growth for me, because it encapsulates so much more than just calling somebody and seeing if they'll sell a property. A lot of times it's like I said, most of the problems that I was coming against when I first started, I didn't understand how to help them. And so a lot of time, a lot of effort, at the time, what felt like wasted efforts, eventually materialized into know-how, things that I was able to problem solve. And over that span of time where I was in Indiana, from the Indiana office from 2009 to 2013, I was making a lot of cold calls. I was driving around meeting a lot of people, and I was getting some deals through. And so, those successes were, good feathers to put in your hat. And, early on in the career of a commercial broker, it's, those successes don't mean that you're driving a Lamborghini or, doing anything sexy in that way. But, but the game is all about learning how to create deal flow, and so I just kept to it. By 2013, moving to the New York City office, which was really amazing opportunity. I was working on shopping centers nationally. I was working on a lot of net lease product nationally. But I was having a different type of problem. I went from being more of a regional guy to like working on national stuff, working on New York regional stuff. And I didn't know anything about New York. And so I'm learning this whole new geography. And I'm learning a new client profile. The East Coast is a little bit more less laid back than the Midwest. So you gotta learn how to be pushier.
You're putting that very nicely, Jesse. I'm from New Jersey myself, so I can say that about my people. But it's very
I love
nice
it. I mean, I love the East Coast vibe and mentality. I'm originally from the West Coast. I was born in California.
Oh, nice.
So there were things that matched in that sense. And I really enjoyed what ended up happening is like working on all these different regions: the Northeast, the Midwest, the Southeast, the Mid-Atlantic, the Southwest, the West Coast. You start to understand kind of this patchwork of the culture of the United States and how to approach people, how people think. But the common denominator that really helped me was like figuring out how to help people, regardless of how aggressive they were, how scary they were when you cold called them, was like trying to find out what were their needs, And so I eventually was able to really trick myself into being empathetic for people. And now I'm very empathetic for people to where, I think the common denominator in my business is helping investors figure out what's going on in the market. Once we determine what's going on, lead them to a charge. And the problem solving aspect of, having done this now for close to 13 years, I've seen a lot, I've done a lot, I've worked on, weird deals where there's, a leasehold and another leasehold, and then the property that you're selling, which you don't even actually own the dirt underneath because there's two leaseholds above. So I've worked on like really strange stuff, and I've worked on extremely highly gate kept stuff, like properties in Greenwich, Connecticut that every broker and their mother in the market wants to buy. So I've seen it all in a sense. I mean, I haven't seen everything, but I've seen a lot. And so the New York, I think, opportunity really gave me this wider view of what's out there and what's to come. So it's been a fun run. It's been a very exciting ride. And, this timing in the market is no different. I mean, I think those 10 years made me more prepared for what we're dealing with now. A lot of over the last few years and currently a lot of ambiguity, but also like how to approach it.
Absolutely. And, we'll definitely get into the state of the market today and what your thoughts are in the future and, kind of advice that you have for people living in the now, right? And what's to come. Sure. But you mentioned so much in there, Jesse. I really appreciate it. I loved the fact of, empathy and, bringing that in. I think that's a huge skill that not a lot of people possess. And it is something that you definitely have to work on. When I used to get into sales originally, people would say, yeah, I just want to help people. And at first I was really, sketched out by that. I was like, really? That's like your main thing? And the more and more, I kind of worked in sales, it is really figuring out how to help people. Using empathy in every area of your life is just going to make you more relatable, more successful in absolutely anything that you do, whether it's work related or personal related. So I love that you incorporated that. But just tell our audience a little bit more, maybe some specifics about lessons learned that kind of set you up for long-term success.
Well, I think one of the first things that I learned in just being in a cold calling type of a business where you're making a lot of outbound calls to people that don't necessarily want to hear from you is to not take anybody's opinion or response that, don't take it that serious. You can't really rest your laurels on some guy that just cussed you out on the phone. I mean, and told you, never to call him again. You got to figure out a way. And I use this like mentality of like failing forward as sort of like an accept it, like own this, be okay with it. Like, because in failure, you find success with enough of these, failed calls. I mean, I've had people who, didn't want to hear from me time and time again. And eventually we listed their property and sold it. And now they're great clients. Like I remember my very first ICSC show, I ended up booking a meeting with the guy out of Kentucky, owned a bunch of properties in my strike zone. I got the meeting with his secretary. I got to the show and he's like, "What are you even doing here? Like, why are we meeting?" And he kind of laughed. And I was like, "Well, I knew that you wouldn't take the meeting if I said it with you on the call. So I said it with your secretary. And I wanted to just get in front of you, whether or not you told me to take a hike or not, because my goal isn't to get a deal right now. It's to spark a relationship and to be there later in the, you know me now, whether or not you like it right now or not, you know me now. And I'm here. I'd love to help you." So he ended up showing me a deal at that meeting that he was trying to sell. And he's like, "I'm never listing this with you guys. I'm going to sell it myself." And he ended up not, being that excited about the meeting. I took the packet and went back to my office. And for about a year or two, I called him, just kept calling him. And we, it would be kind of like a joke. I would call him and he'd tell me to take a hike and I'd kind of laugh it off. And 2019, I got the proposal for the property that he gave me the book for, 10 years prior, or whatever it was, 5 years prior. And in 2020, we took it to market. We sold it in 2021. So we had it out there. So I sold this property that I've been trying to get for, 10 years. And now I've done probably 50 million in transactions with this client. And anytime he has anything to do, he calls me. And it doesn't matter what product type it is. I'm his guy. And then I find somebody else to help him with the issue. So I think perseverance. One of the things that really define, I think, this punchiness that like to just keep doing it, to just like, right, whatever, this guy just told me to take a hike or whatever. It was this idea that I had called this winner's mentality, and it's like, if you watch, Kobe Bryant or Muhammad Ali or Michael Jordan, there's just like kind of an energy. It's not, some people think it's cockiness. Some people think it's whatever, but there's an energy there that they're tapped into. It's probably directly flowing to them. Mm-hmm. Well, I had to find it in, the ether, and I was able to tap into this vibe, this energy, to where I was like, all right, I'm just going to call it. I had decided I'm going to start calling anybody and everybody that is, falls within the range of my scope. And the problem that I had was I was a wimp. And so I had to tap, I was like, I don't want to get told to, take a hike by people in my industry. So I was like, so to overcome that, I learned to tap into this winning mentality, to where that's essentially what's defined the last probably 4 or 5 years of my business was, all right, I don't want to call these people. Why? Well, they're going to reject me. And then it's like, all right, well, then you just have to bring this alter ego with you. And that was what really helped me get through a lot of that, was like finding sort of an alter ego, or just, this energy that I could channel that, got me on the phone. I was punchy back, and, they're laughing, we're having a good time. And so I think, taking risks, not letting your past self define you. I think a lot of people that knew me prior to 2019 to 2020 had thought, oh, Jesse's whatever, I do a few deals a year, just flew under the radar. But something sparked, and like last year we crushed it. We had a huge year. I was, one of the top agents in the region in the Northeast. I've, got like, Marcus Millichap awards that I still don't necessarily know what they mean, but they're important because, you don't get them just for showing up. You have to make, you have to make deals.
Absolutely.
And so I think a lot of it is really, for me, is focusing on like the day-to-day, like I'm going to go in, I'm going to do my best. I'm going to crush it. I'm trying to create productivity, like proposals, listings, offers, closings. Find buyers that need deals immediately. I only really work on things that are immediate priorities. Like if somebody has like $5 million in the bank, but they want a 9 cap, it's like, hey, this is not a 9 cap market. So I'm not going to spend my time working on this deal. I'm going to work on the $2 million deal with a listing because I'm going to get paid. Sure. And so focusing on those things that, that will make you money and that will, just bring you closer to your goals, and being like laser focused on what it is, the big picture.
Yeah, I love all of that. Jesse, I call it revenue generating activities. Over here at Crexi, what are you doing to make money today? How many deals did you get done today? What did you do to get closer to your goal? How many at-bats did you have? Right. So I love that aspect of everything. Also to take a page out of Ted Lasso's book, right? Be a goldfish. That was one of my biggest lessons, I think, from that show. It relates to sales. And I think, what you touched on in cold calling in the initial portion of that, don't be afraid. If someone tells you, go kick rocks, give them a call back, be a goldfish, have that short mentality. Don't be scared to get back on the horse and call that person or call another person. Right.
Show up to a meeting they didn't know you were going to be at. Yeah.
Have that kind of chutzpah behind you and, also take on that winner's mentality, right? That Mamba mentality. And if, you don't think that you have it just yet, right? You have a little bit of imposter syndrome, pretend maybe that you're someone else, faith it till you make it, right? Is what we say. And then that'll really embody because you know within yourself and you gain that confidence, like, yeah, I am that person. I am going to get this. I am going to be that person that crushes it and gets all these awards and recognition and things. And this is now another part of me, to the growth aspect that you were talking about. This is another part of me maybe that I didn't even know that I had. And, now we're here. So constantly be, evolving and growing. I mean, I love all of those tips. I hope that our audience has taken some notes there because that was awesome. Appreciate that.
I had that all written down.
Perfect. It was so free flowing. I had no idea. Appreciate that. So moving, Jesse, into our second topic of the day, what has the net lease playing field looked like recently? So what trends kind of stand out from you from pre, during, post-pandemic? You kind of said that the pandemic has increased your business a lot. So how has that changed during the course of, the whole pandemic and COVID-19 as a whole?
It's a good question. So let's say, 2020, rolling into 2020, let's say 2019, had been setting up social media presence. My link, was focused on LinkedIn. I had started an Instagram account. I'm still mediocre on Twitter. But I had these, presence within each respective channel. Like on LinkedIn, I had 30,000 connections, and I was like trying to figure out how to monetize that, how to turn that into listings and sales. Yep. So we roll into 2019 or roll into 2020 from 2019, and had some listings. Like I had this industrial building that was very hard to sell, tied to the Chinese trade war, and sitting in a market where there was a lot of political heat in the Midwest. I was just getting ready to take a Starbucks to market, and COVID was hitting. I'm listening to the news. I'm like, oh, this is going to be scary. What's going to happen? COVID hits, and one of the things that I had been doing is I'd been sending emails out every day during the week to a pretty decent sized database, like 50,000, 60,000. And I had decided, like, during COVID, I was like, all right, I was cold calling people, but it wasn't a good time to cold call people. It was like really touchy. I was ready to just lay down and watch Netflix all day and cry in a ball. But I kept
I may have done that a little bit. Just a little bit.
Well, no, I mean, I know that because I was talking to friends who's like, yeah, I've just been watching Netflix and like, it's been depressing. And I'm like, well, all right, I can't do that unless I prove that I need to. So I'm going to just wake up, send out my emails, get these deals out there, see what happens. And I was selling, the stuff just started selling because like, well, the warehouse deal was like importing PPP like PPE.
Yeah.
Like the mask and all the stuff, the gown. So they were doing like 100 million in sales. And so all of a sudden this deal went from unsellable to highly sellable.
Yep.
I listed a Starbucks in a college town, like literally the week that COVID had hit the US. And everybody's like, don't go out, do anything, blah, blah, blah. And they're closing Starbucks stores. Like they weren't closing them for good, but they were, turning the lights off and nobody was going in. And this store was down the street from Purdue University, and they closed this store as well, but we found a 1031 buyer that, believed in the market, but it was all, from that presence, social media, the email blast. And so I was proving that I could get these deals sold. I was really heavy on, the digital technology. And so I continued to do that. And I was getting listings, I was picking up listings, and people are, around me are seeing their businesses falter. But my business was designed, I guess, to be good in an environment like that, so no cold calling. So I was seeing a lot of activity coming inbound. So I was feeling depressed. And here I am making all these, people are calling me, I'm making deals. I'm like, all right, well, I feel pretty good for it being so bad, right?
Something's working.
So I'd say social media has been the linchpin. Social media and going back to that, like, just the chutzpah to keep going. I just was like, all right, we're going to keep sending the blasts out. Monday, I send out a newsletter. Tuesday's a property. Wednesday's a property, and so on. And that essentially, anytime I had a closing, I would send an announcement. And that just generated what I had hoped, which was an inflow of business. And so I think that's one of the first really signs to me that, like, don't let up, keep the foot, keep your pedal to the metal. This is not a time to like worry about things. It's a time to like grow your business and take your strengths and really just go. And so I was able to get a lot of deal flow in that year. That was my best, 2020 ended up being my best year in, a decade with Marcus and Millichap. And so that was a defining moment. 2021, I sold more than I had in the year prior, which was pretty exciting. So now there's a lot of pressure on this year to obviously
to keep it going. Yeah. But you've got it.
we're on pace, but we'll see what happens. Now, and the big thing for me since I think 2020, I brought on some staff, like financial analysts, transaction coordinators, because I was getting so I was getting so bogged down with these different tasks that I needed to buy back my time. So that's one of the big things that I've been really focused on, is like buying back my time, really working on the things, like you said, that are going to make me, that are going to keep money flowing into the bank. I've got, now I've got all these staff members and so forth. And so it's been kind of interesting to transform the business from a 1 or 2 person show to 5, 6, 7, 8, 9. During COVID, 2020, one of the things, while I was not being depressed, one of the things that I was doing was I was talking to a lot of friends in New York that were working New York deals. And one of my buddies, Saeed Boukalfa, and I launched a New York team. So I have 2 teams. I have a New York City Metro team, and then I have a national net lease team. And the New York City Metro team launched really during COVID. We listed a multifamily building in Long Island. That's his foray, is multifamily and development sites and whatever, any kind of weird thing you can think of in New York. If it's commercial real estate related, Saeed's the man. So we got a dozen offers on this deal. It was like, the weirdest timing. It was like the heat of the beginning of COVID. Got a bunch of offers. We sold the property for more than list. And so, so we pretty much launched a New York Metro team. Now we're, we're off to the races. We've got a bunch of listings, we're putting stuff under contract. So it's kind of been exciting to see the seeds sprout into a small plant, which is kind of where we're at right now, and wanting to get that to a tree. But I think, over time with a lot of nurturing, and, he and I are in constant contact. It's really exciting to see it happen. I mean, we've got probably 10 listings right now, and we started with one in 2020. So
that's awesome.
Yeah. The other thing I think you asked was like, I lay really heavy into digital, social media, but also Salesforce. So I invested in Salesforce, I think, in 2020, and we use Pardot, we use Salesforce. I'd say that building out like the technology side of my business has paid me back, 10x each time I invest in that. I see it come back. I mean, Crexi is an excellent example of the power of technology in commercial real estate. And so I took a lot of what I learned from using Crexi prior to having my own website and all this other stuff, and I brought that over to my process now was things that I learned from using Crexi because it was so impactful. It's just like a never ending learning process and just constantly going with the flow. The other thing, I learned how to pivot, right? Like during COVID, I was really heavily focused on like big box retail, or pre-COVID rather. And during COVID, I remember I meditate every day. And so I meditated, and I got done meditating, and I said to myself, all right, I can't keep calling, these product type that aren't going to get me anywhere. And so we really like doubled down on discount stores, and we're like DGs, Dollar Generals, and build out the database even more, started making more calls to Dollar General developers. And we saw dramatic traction out of that investment. We sold like 9 or 10 store portfolio to a buyer. And then we sold a slew of Dollar Generals from a developer that we met during COVID, through that marketing campaign. And so I think trusting your instinct, kind of having a gut about where things are headed, those are the type of things that will help you stand out and hopefully, succeed and make money in the industry.
Yeah, I love that. I mean, all of that. I mean, obviously, as a commercial real estate broker, you do have to differentiate yourself, and everything that you were saying about social media, and you're building your own brand and making sure that gets out there. And even through, the turmoil or potential demise or the unknown, you kept steadfast and you kept doing what you were doing. You didn't recoil, and you kind of kept sending out those announcements, and you just kept forging ahead, which led you to, then have another partnership and be able to grow that business in such a way. Again, still working on yourself and meditating, right? I kind of thought about a flow state when we were also talking about, like a Mamba mentality or winner's mentality. So that kind of got me, and you said the meditation. So, when you're rocking and rolling, you kind of get into that flow state where it's like, this is what I'm meant to be doing. And I'm doing it at the highest level of my capability. So, appreciate all of that insight, and, everything. Also, you kind of are leading to something that I want to talk about as well is, doing that focus on Dollar Generals, right? So what makes these net lease properties, such as like the DGs of the world, so resilient in changing economic times? And then, when you talked about being able to kind of trust your gut and predict the future, what are your thoughts on investments in these properties, amid rising inflation that we have going on right now?
It's good. It's a good question.
A little bit of twofold there.
No, it's all right. So I think, one of the reasons why I really felt compelled to dive deeper into the Dollar General space and double down on that in terms of cultivating more business was because when I started in 2009, we're in this really tough, tumultuous economic time. And I got done meditating that day, and it kind of like this light bulb went off. I'm like, Dollar Generals are going to crush it. Things are crazy. They've got the right business model. There's a lot of ambiguity in the market. And so a part of that was I just felt that these tenants where there's, they have access to people that don't have very great shopping access, like if you go out, you drive rural Kentucky or Indiana or wherever in the US, you can drive along a highway and there's just, it's a Dollar General every 5 miles or 10 miles. And so that was one of the things that was like, all right, I know people are going to need these necessity essential items. And I firmly believe that this tenant and actually Dollar General, like I think a year into into COVID, they got an upgrade and they're now like triple B minus, which is the same as CVS and Walgreens. And so CVS and Walgreens were two other tenants that I'd already been kind of really heavily working on. So it was sort of a double down into that necessity credit. So to answer your question, people, investors, folks that are worried about the uncertain can feel fairly certain that a store that provides essential goods is going to be essential and necessary. And so that all kind of proved out real well with these essential retailers being probably among the most profitable over the last so many years. And that was, I think, the genesis of my gut instinct and kind of where I continue to go with in terms of my business and what we're looking for is assets that can weather the storm. That New York Metro to me is extremely dense infill, and there's a different way to look at that market. And to me, that was why it's safe to dovetail into that side of the, taking a part of my time and energy and like saying, okay, I'm starting this New York Metro business. Well, that was why. It was because I felt the same, just like a Walgreens with a 15 or 20-year lease is safe. Mm-hmm. I feel like a patch of dirt surrounded by 20 million people is safe.
Right.
And so like the Walgreens, the CVS, the Dollar Generals, the grocery stores of the world, as long as the real estate is great, if you have a long-term lease, you have a corporate guarantee from a credit tenant, you should be relatively safe and secure, at least for the duration of that lease. And if they do go dark, they're going to pay the rent as long as you have the right tenant on the hook.
Right. Right. Absolutely.
Did I miss anything?
No, I think that you got everything. And kind of gave a really good perspective on why you chose to do what you wanted to do as well, and kind of focus on the areas that you're currently in. So appreciate that, the talking about the safety of the assets. So that was perfect. Gonna ask you to go into the crystal ball again for me here. So with, how are increasing interest rates impacting deal velocity or potentially influencing investor mindset going into the transaction process?
Well, there's definitely no shortage of ambiguity with rates increasing. Mm-hmm. I think that what we're seeing play out in the market itself is a lot of the folks that were in the market before are out of the market. They're in the sidelines. They're doing other things with their cash, like the folks that are not necessarily 1031 buyers. So there's still a strong amount of 1031 activity. So for the right type of assets, we're seeing deal flow. We're seeing offers. We're seeing activity there. Right now, I think hot button topic is inflation proof. So everyone wants 8% annual increases, which is not not realistic at all. But inflation hedge. We're looking at trying to find things that have inflation hedges. I think that one of the things that I'm looking at is multi-tenanted retail. Mm-hmm. Stuff that's been fairly good, but the reason I say that is multi-tenanted retail assets that are tied to interest rates. So properties, let's say I own this shopping strip, my loan's coming due, I have to either sell it or refinance it. I'm selling it, but I have to base the sale price on the market relative to the interest rates. And so, you can't have an unrealistic price like relative to single tenant deals where you could be a negative leverage situation buying a Chick-fil-A or a McDonald's anytime, right?
Mm-hmm.
But if you're buying an asset that you should be able to see some kind of a cash flow on, it's very hard in single tenant right now, on the longer term credit deals. So what I'm trying to say is working towards getting more inventory that isn't necessarily, got to have a cash buyer for it. Just to diversify the, I guess what we're doing some.
Mm-hmm. Yeah.
I still feel relatively good about retail strips. I don't love 100% occupied strips with like all, Chipotle and T-Mobile and, cause then you're still at like a 5 or 5.5 or 6 cap.
Mm-hmm.
And with rates in like the 4+ now, 5s, it's really tight still on those deals. So something with little hair, some vacancy, maybe below market rents. Those are the type of deals that I think could provide some, a hedge against just working on low cap single tenant triple nets.
Sure. You kind of started to talk about this, Jesse. So is there any, those are kind of like what you're seeing. Is there anything else, that might be coming from a demand from other property types? So, maybe multifamily or hospitality or anything like that, in your opinion?
What do you mean by what's your?
So in terms of like, is there any shift, would you say, or demand, for
demand shift?
from other property types?
Well, okay. So one of the things that I've been jealous of for years is self-storage, because
Mm-hmm.
self-storage is like, you can raise rent every month.
Mm-hmm.
And so it's like, it is recession proof.
Yep.
And I say I'm jealous of, because I'm not built to sell that product. So love to sell self-storage. But yeah, I think that like self-storage is really popular right now. New York City real estate's fairly popular because it relatively inflationary, depending upon if there's rent control or not.
Sure.
So to a degree, we're seeing a lot of activity in the New York metro. I think that I've been hearing that more like a lot of hospitality deals are getting done.
Mm-hmm.
And again, hospitality deals are tied to interest rates. So caps are going to be going up. That market's been waiting for that opportunity to get better yield. Like I said, I'm really big on, I like shopping centers right now.
Mm-hmm.
Industrial's still hot. I'm very interested to see what happens because Amazon overbuilt so much in the industrial space, where that leads to down the line. But it doesn't seem like there's any shortage of need. And a lot of that's tied to, our being a more e-commerce, regardless of who the tenant is or who the operator is. So I think that the demand will continue to carry on there. Caps are super low. Overall, I think, and I've been saying it on socials, like commercial real estate has been a safe haven in the eyes of investors, because while a lot of other alternative assets, investments like the stock market have been extremely volatile,
Mm-hmm.
Walgreens, is still operating in that location for 10 years, 15 years. The volatility is really hedged by the fact that you have such a long term, and by the end of that period, it's like we're going to be in a totally different economy. So a lot of the immediate issues don't matter so much if you're buying the property right.
Absolutely. I couldn't agree more. I appreciate that. Definitely. I mean, a lot of volatility right now in the stock market. I think the safest bet is for a commercial real estate investment. So, maybe hospitality, maybe those shopping centers, any investors on our call, definitely reach out to Jesse. He can help you out for sure. So appreciate the insight there. So let's talk a little bit about, I know you touched on this, about single tenant net lease. right? So what does this influx of demand, right, for single tenant or single net lease tenants mean for supply? So any differences across markets? I think you talked a little bit about cap rate shifts and, everything from a financing perspective. So talk a little bit about this from a supply perspective.
I mean, I think the best thing we have going for us is that there isn't a lot of supply. And so that has helped keep rates relatively stable. Anecdotally, I had a Dollar General for sale in Q1. We were priced at a 5.1 cap. We went under agreement at a 5.2 cap, and that deal blew up just with respect to the buyer wasn't right. Deal's awesome. Well, we're now making a deal at a 5.25 cap. So we repriced it to a 5.2, and we're only 5 basis points off from where we were under agreement in Q1, and we're almost into Q3 of this year. So I feel like with respect to cap rates themselves for the right assets, there's been a very little shift in the single tenant space, maybe 5, 10, 15 bips, depending on what it is. Okay. And I feel like a lot of that's tied to alternative options in the net lease space. There's not a lot. I mean, where we're at, if you talk to a developer today, they're going to tell you that there's issues with costs, with resources. Steel costs are out of control. It's hard to get your product. It's hard to get your materials. It's hard to find labor. And so a lot of those particular components of the market are still playing out, and I think benefiting the overall current situation for us. And I don't see that letting up anytime soon. I mean, this has been a continuing, ongoing issue for a few years now. I think there's finally might be some relief in the lumber world, but most of this stuff that we're dealing with is steel related, and it's an item that's going to continue to be short supply. So I feel like all things equal, we probably won't see a huge shift in cap rates for single tenant deals, especially the good stuff. Okay. Most of the more difficult assets, things with no credit, low credit, those assets are like, for instance, I have a triple net leaseback with a no credit operator on a senior living facility, and we're priced at a 6 cap. And the fact that we're priced in that range is very attractive to investors in this market, because they're going to get a 150 to 200 basis point spread between their interest rate and their cap rate. And so even the weird stuff, the things that are maybe less attractive in certain markets, are very attractive in this market because it's a yield-based, yield-driven market. Yep.
Absolutely. No, I appreciate that. And I, love that you're kind of thinking outside the box and kind of working with some of those maybe a little more quirky deals, or not, so cookie cutter. And then that's really what's going to attract the demand, and really good. I mean, you said earlier on the call, you're really good at pivoting. So, kind of bringing on that new arm to the business and having some of these deals has obviously been really successful for you. So good to know on that one. Another topic, how will potential changes to 1031 exchanges from either the current or future administrations affect the asset class, do you think?
Wow, that's a question.
Interesting one here.
I think that the government would be really silly to do anything to the 1031 exchange, because it's such, it would be bad. If you look at Canada, their velocity is almost non-existent, and they don't have a 1031 exchange type of a mechanism. I think that it would hurt the economy. It would hurt segments of the market more than, but to me, it would just, look, a lot of folks believed that going into Biden's first year that we were going to see something happen. There's too many players on both sides of the spectrum and in the middle that don't want that mechanism to be touched. And if it was, it would hurt. It would cause a ripple effect in the economy that I don't think that anybody wants to see that happen. what would happen with pricing? It would probably cause caps to go up on a lot of assets. Like the best in class assets would probably see, some shift relative to wherever, caps are at that moment. But again, I don't see that playing out.
Good.
I just don't see it. I'm not convinced that that's going to happen.
Good. Okay. That was hopefully the answer that we wanted to hear. So I appreciate that. And then before we go into, kind of our last topic here, but just looking into the future, bringing out that crystal ball again, Jesse, what do you think the rest of 2022 looks like for single net lease tenants? Do you think there'll be any changes in development or market corrections further, change in shifts maybe in tax incentives? What are you kind of giving on your prediction for the rest of the year?
I think with like the net lease space, we're everything's tied to where the 10-year treasury is. And while they continue to press interest rates up, federal funds rate, it's going to continue we're going to see some cap rate escalation. So prices will probably slowly shift downward. For instance, let's say a Chick-fil-A was a 3.25 cap. Maybe we'll see those in the 375s, 350 towards the end of the year. Because if they continue to push, but again, a lot of the buyers for that asset are cash buyers.
Mm-hmm.
So there's no rates, there's no interest rates, there's no loans involved. So that's not really the reasoning for it. It's more of alternative investments yield higher returns than the subject asset. So I think we'll see, there's not, and again, with cap rates and interest rates, there's not like a 1-for-1 shift. So we saw the rates shift, the federal funds rate shift 50 bips, but some of the anecdotal evidence that I'm seeing is that it's, on caps, 5 to 10 bips, maybe 20, depending on, again, what we're talking about specifically. So I think while it's still open for discussion, it shouldn't cause things to dramatically change. Right now, I think the market we were in a euphoria probably all the way up and through about Q1. Maybe it ended in Q1 or was about to end in Q1. We're definitely more in a normalized market again, where things are, assets that have been listed for a week or 2 or 3 or 4 are probably still available maybe. So I think that you'll see a longer time, longer market time for deals. I think that longer than we've been seeing, more normalized. Mm-hmm. I was just having this conversation. I think the market is normalizing to an extent because you don't have this there's not a lot of speculative developing and people that are taking the folks that would be 1031 exchange buyers out of certain assets. There's not quite as much of ferocity in that space.
Okay.
So, yeah.
Good to know. Good to know on that. Any other predictions or anything that you want to touch on here?
I think my prediction is that, and I've been saying this since they shifted rates, sellers, developers are going to need a broker to get their property noticed, a marketing plan. Exposure is going to be important again. Brokers aren't going to be calling you for a deal that's off market because they can't find anything on the market, because there's properties on the market that are being sold exclusively again, that are available. A part of the issue that we had, I would say Q3, Q4 of last year, was that nothing was available. And so it was all about who you knew. Mm-hmm. And a lot of I've had conversations with folks at ICSC, folks that everything was under contract all the time over the last, 18 months. Those guys are saying, hey, look, we're going to need brokers again. We can feel it. We can see it. So I think a skilled broker is definitely going to be necessary. And thankfully, and we're loading up on inventory right now. My team's taking a couple Walgreens to market, one in Iowa, one in Alabama. We just listed a QSR deal in Arizona. We're taking an Applebee's to market in Louisville, Kentucky just this week. We're selling a couple of like higher price point Walgreens, about $13 million deals, one in Virginia Beach, Virginia, another in Buckhead, Atlanta. And so we're really focused on getting the exclusives, controlling the market, controlling the inventory, and making a market for these deals. And I think that, everything that, the social media, the, outgoing email blast, being proactive, cold calling, and now getting face-to-face with people will be all part of the winning ingredients going forward.
Awesome. Thanks, Jesse. I promise I won't ask you to use your crystal ball anymore, but thanks for all of that insight. I love hearing, brokers are needed. I always encourage brokers for everything. You definitely need them. That skill and expertise that you guys have is just, second to none. So I know you gave a little bit of advice here, keep with the cold calling, the social media, you'll definitely be needed, but our last and final topic here, just some advice. So what advice would you give to fellow brokers, either currently working or looking to work in the single net lease space?
I think the same advice that I had to give myself over time was, don't take yourself too seriously. Don't be afraid of failure, and learn how to be as active as you possibly can. Like, get out there with a vigor, be proud of what you're doing. And really the other thing is you have to just be a sponge, learn as much as you can, ask as many questions, soak it all up. I broke the mold in a lot of ways by doing the social media thing. And, I say, try new things, be creative, allow yourself to, to make mistakes a little bit, within reason. Marcus Millichap. No, but, make, do things that'll get your name out there, give your analysis of things. Don't be afraid to be a leader. People respond to that.
I love that. Going back to something that you said earlier, it was taking risks. Don't be afraid to take risks. So build that brand, take the risks, be that, sponge, always be learning, really, really great stuff. I'm ready to run through a wall, Jesse. So appreciate that.
Take the road less traveled, for sure. That wall is, no one else is going through there.
Exactly. And then one last bit of advice, for any investors that are listening, what advice would you give them right now?
Partnering with a good broker who has a lot of relationships, and being loyal to that broker will go a lot further than, talking to everyone. Because once you're talking to everyone, you're diminishing the overall value of what any one of them will do for you, to the extent that you're getting less than what one would do for you if you had loyalty.
I love that. I mean, brokers definitely, as I said before, definitely needed. And it's that partnership. It's, making sure that both of you guys trust one another. Right. And then, you can do your best work. So going back to that empathy piece, like, I want to help you. So, having that, relying on that, being loyal and kind of working with that same person, is going to get you farther than kind of spreading it all out. So really appreciate that. Thank you so much, Jesse, for joining us. It's always great. Yeah, absolutely. It's always great to hear your insight. That was a fantastic episode. So really appreciate you joining us, and sharing your insights on such timely and important topics. Definitely appreciate your time today. I know you're very busy, so thank you for taking some time to sit down with us. Jesse, where can people find you online if they want to get in touch? So either social media, as you mentioned, email, what does that look like for our listeners?
My email is jesse.limon@marcusmillichap.com. My Twitter, Instagram, TikTok handle, Jesse Limon, CRE. And you can also find me on LinkedIn if you look up my name.
Awesome. Awesome. Well, definitely everyone feel free, definitely connect with Jesse. We would love to see that. And thanks for everyone who tuned in today. If you enjoyed this episode, do not miss the next one. Visit go.crexi, that's crexi.com/podcast and sign up to get the next episode delivered straight to your inbox. Of course, you can also subscribe to the Crexi Podcast on your favorite podcast app and check out our YouTube channel for video recordings of each episode. Take care and be sure to tune in next time.